Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I am your host, Justin Dixon, and today we've got Mike Ma on the podcast. He is the managing partner of Sidecut Ventures, which is a pre-seed venture capital firm based in New York, and they look for coachable superheroes to invest in. So effectively, they work with founders to help build their business, help coach them for free for 30 days before they write a check to invest in the business. So he's got a super interesting model. We talk a lot about snowboarding because that's where Sidecut comes from. And so I think you'll really get a lot out of this episode. So let's get Mike on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Mike, welcome to the podcast. Thanks for being a guest.
Hey, it's a pleasure being on. I'm really excited to be here.
Very cool. Well, let's start everything off with a little bit of an intro. Give everybody a little bit of an overview of who you are, where you are, and what you're up to right now.
Sure. My name is Mike Ma. I'm the managing partner and founder of Sidecut Ventures. We are a pre-seed firm, and our thesis is coachable superheroes. So I know that's a big marketing mouthful, and I'm sure we'll talk about marketing and growth. But to unpack those two words, coachable means this. We work with all of our founders before we invest 30 days, boots on the ground, belly in the mud, fingers on keyboard, shoulder to shoulder, just to see if we vibe, particularly around the areas of growth, traction, product development. We don't charge a dime. We don't want anything other than the founder's time, attention, and the opportunity to be a major investor. You like us, we like you. We'll write you a $250,000 check or so, 200, 300K, as long as you're building something, which is the superhero side. And that is impact. We are really excited, unapologetic impact investors. We invest in economic mobility, climate, education, healthcare, disability tech. We are impact generalists. We are looking to, well, for me, I'm 50. I'm looking to back companies that are going to build the world that my unborn grandkids are going to grow up in. I've made enough money. We'll talk about career. I've made enough money in my career for people who don't need it. And that, if I'm going to go through this crazy crucible of raising a fund, that's what we're aiming to do. So that's what we do at Sidecut, coachable superheroes. And we've been in business for about a year and a half. We've made 14 investments in 12 companies as a solo GP, although I have a team behind me. We've led 6 rounds. We are raising follow-on capital, and we had 2 companies on Time's Best Inventions of 2025. So
oh, wow.
It's been a lot of fun. I mean, can't spend that, but it surely was an interesting present to see it in the Little Red magazine at the end of last year. So that's what we're up to. I'm in New York. I'm a New Yorker, but I'm really a Cleveland kid. I grew up in the Midwest, so I like to think this fund has coastal aspirations, but really by this whole grinding thing, it's a very Cleveland, Midwest sensibility type of fund, and I love it. I'm really excited for where we are.
Well, I'm guessing that the Sidecut name comes from snowboarding or something like that, because I saw you're a massive snowboarder and you teach snowboarding, and obviously one of the photos on your website is you guys out in the snow. So I'm assuming that's a snowboarding term.
It is. So Sidecut refers to this the geometry of a ski and snowboard. And in case this whole venture capital startup thing doesn't work out, I'm a snowboard instructor. Not only am I a snowboard instructor, I work as a staff trainer at Mount Snow. I've also we have a national association called Professional Ski Instructors of America, an American Association of Snowboard Instructors. I'm an examiner on the education staff. And if you ever go to a ski resort, we actually, just like CFA level 1, level 2, level 3s in the financial world, we actually have certification in that area. I'm part of the team that goes around and educates instructors and sometimes administers exams to some of those people around the East and also around the country. So that's my role. And the last thing is I actually had an opportunity to serve on our national team. This association has 29 instructors around the country, most of which are like full-time hardcore, like this is all they do. I made the adaptive national team. Okay. And I served a COVID shortened term, 3-year term, normally 21 to 24. And I had the real pleasure and honor of wearing like red, white, and blue and travel around the country, working at resorts large and small and around the world to represent what the U.S. thinks about snow sports, particularly adaptive and disabled snowboarding. And so the reason all this is very relevant for me, at least how I think about it personally, is we really value coaching. And when we work with a founder, I look at them very similar to a candidate when they're coming for an examination. And I don't really care a lot about how you got to the mountain.
Yeah.
I don't really care about your credentials. I don't really care if you went to Harvard. I don't really care if you went to OpenAI, I really care about your performance on that day. And the only way to discern that is to metaphorically go snowboarding with you. And that's my commitment to founders and how the ethos of this firm is wrapped up in the word Sidecut. That I think so much, particularly early stage investing, is based on, oh, I was an immigrant founder, or oh, I went to Caltech, or I went to this fund, or I'm only building in this particular geography. I think the best founders can come from anywhere. And I think the only way to find the best founders is to work with them. And it seems all very commonsensical, but that's the ethos of what I do and off snow and how it translates to on snow. So hopefully that yarn connects for you and your audience, but I'm very, very interested in just watching founders cook, letting them cook.
And so I grew up skiing. I grew up in Pennsylvania, so I grew up on the small slopes in Pennsylvania, mainly in the Pittsburgh area. But I tried snowboarding once. I loved it for the first day. I went out so much. I bought a snowboard, bought boots, bought the whole thing. I thought this was going to be my thing now as I got into my second phase of kind of snow sports. And then I went one more time and haven't touched. Actually, I've only been skiing once, and this is like 12 years ago that I did the snowboarding thing. So it's a fascinating sport. I feel like skiing is easier to learn first. You may disagree with that, but snowboarding seems like it's a lot of fun if you're good at it. It seems like you're just sliding on your butt if you're not. And that's what I did most of the second time that I went.
Well, what I would say is that anything is fine. And as long as you're sliding on snow and having fun, it's actually all the same. I also am a big believer in is just being out there is the most important thing. And that, so I have friends who are 2-plankers. You're good. Seven Springs, in Valley. Where'd you go?
So my grandfather had a cabin right on the slope, Wagner, which is their main face at Seven Springs for a very, very long time until the Dupre family, which owned the mountain a long time ago before they sold it to some big conglomerate. And now it's all condos and, it's all big company stuff. But I grew up skiing there probably up until about the mid 90s. So dating myself a little bit, but it was fun out in Pittsburgh. So anyway, that's another podcast. We could talk about skiing and snowboarding offline.
No, but it does connect. I mean, and it isn't a gimmick. I can draw a real line if you would like. It actually relates to Pittsburgh. If you would. So for instance, one of the reasons I invest in disability tech is because I spend time in the disabled world. And in fact, this will be out by the time that this podcast airs. We just wired a disability investment into a company called Hapware. And they provide a wearable that enables blind people to see and feel through haptics, facial expressions, and nonverbal communication. My thesis on this company, disability and blind is the wedge, intellectual disabilities is a secondary market. And then afterwards are the neurotypical market and sighted market, where you can receive haptic feedback and haptic OS through a wearable for whatever you're doing, whether it is I'm trying to pick up nonverbal communication during a podcast in a very cool way, to interviewing for a job, to knowing if someone's deceiving me. There's all these things that haptics can do, and I think they're going to underwrite the haptic OS And the only reason I have, and this is a true story, one of the reasons I have such conviction on this particular investment was I was helping Envision Blind Sports in Pittsburgh. And I was doing blind guiding with their group. They're based there. And they were one of my quick tests when this deal came across my desk.
Interesting.
I sent it to the person I was skiing with that day. Hey, what do you think about this, Mason? You ended. He texted back and he's like, I need this immediately.
Yeah.
So in so many ways, and I think this is true for your listeners as you talk to people, like, this is not a gimmick. What I look about Sidecut, it is not a gimmick. It is substantive in terms of giving you insight and edge and understanding that 1 in 4 people in the United States are diagnosed with a disability. Mm-hmm. My dad joke is the other 3 in 4 were just undiagnosed.
Yeah.
and the ability to understand that so many things that you use every day have come from disability tech. And the second thing is the process by which we diligence this company is like running a skiing exam, a teaching exam. Kick the crap out of this founder. Love you, Jack, the founder, for 30 days just to make sure that he could do the job. And that is the ethos of this firm and why I'm dedicating this is my last act as a working before I become full granddad and ride off on the sunset. I want to back founders who are going to change this world through empathy and make a crap ton of money along the way. And I want to see them work, metaphorically snowboard and ski with my own eyes in a way that I know more on the benefit of both my investors and my other founders. So that's, I know it was kind of a throwaway. It could seem this way as like, oh, some skiing VC dude, how bougie. It isn't. It is really substantive. It's very important to me. And it's so much of the fabric of who I am and what this firm stands for.
So how do you find the right people on the front end? Because a lot of times I do some angel investing. And so a lot of times founders want money and maybe they want a little coaching, but they want the check with the money, or they want the check with the coaching, not the coaching and then the check, right? They almost, at least, and you can obviously correct me because you've been doing this a little bit longer, but how do you find the right people that are saying, hey, and before I write you a check, you have to go through my gauntlet. You have to go down through my course for the next 30 days where we work together. And then if that goes well, then I'm going to write you a couple $100,000 check and then we're going to, link arms and go from there. Like, how do you pitch that to people? And do you get response that are like, nah, I'll go find money someplace else. I just need money.
Yeah. I mean, so the first thing I think is so much how you position it as a founder. So one, you need a reason to believe that this is worth it. So when I present, like, I've been a CRO, I've been a CMO, I've been a CGO, I've been a founder, and 4 starts, 2 exits, 2 huge flaming dumpster fires. I've walked in your shoes. So the way I position it is this. 1, no busy work. I've already run an accelerator. I've already taken 8% of companies for a small check and 16 weeks of your time. So 1, no busy work. We are only going to do things that are accretive to your business. 2, and I say, you can leave anytime you want. I don't charge a dime. I don't want a common share. I don't want a warrant. I want nothing other than your time, attention to be an investor. 3, I keep it light. We meet 4 times. We meet for 4 weeks, twice a week. You're on our Slack. We record everything. Meeting 1 is kind of a consulting deep dive. Meeting 2, I will put you some best practices either from me or one of my operating partners. And then meetings 3 through 8, you organize. I don't do anything. If you don't find use of it, don't come. If you don't do it, then that means one of 2 things is true. I'm just a check to you, and then I probably can't invest. Second, you may have a tough time as a founder navigating ambiguous resources and tight timelines. That's also a negative signal based on what you do, because that's kind of like the job of being a founder. Yeah. And so that's the deal. I try and keep it value add, and I try and offer empathy about, like, look, this is helping your business. I always tell you this: don't do this for me. Do this for you.
Yeah.
Then I zoom out and I say this: look, the average marriage in the United States is 8.6 years. The average time I'm going to be on your cap table is higher than that.
Yeah.
don't we owe it to each other as humans, Mike and Justin? You move your toothbrush in for a month, or I'll move mine in. So we're not looking at each other at 2032 asking, oh my God, I hate you. Why are we here? Better to know. And then that's what I say. And I said, honestly, like anytime someone says yes, there's 30 days of like this cap table, that, or this MFN, this, or like we do that too. But Justin, why don't you get something for your time?
Yeah.
Why don't we do something value? And like I said, quit anytime you want. So those are the things, and the right founders get it. We very rarely have people who pass unless it's like truly a hot round. And then we miss, like, we had one founder, they were so down to do it, but then he said, like, we just closed this massive deal. Like, and I just look at him just like I would another founder. I'm not going to trap you. I was like, listen, congratulations, brother. Hit me up on the next one. He's like, 100%, I'll do that. And I think it's a way just to be, it's because I've been I can't say I've been a great founder. I've been a founder. And I think that's how you represent it in the most human way possible. And so
is this part of your due diligence process? Like, is this in addition to, or is this like you're doing due diligence during this 30-day process? So it's almost a win-win. You get to peek behind the curtain. You get to actually start to do your process, but you're also, theoretically, you're also helping to protect your investment. If you're helping that founder, you're proving your thesis of like, yep, this guy is a coachable superhero or gal. And then you're also being like, okay, now I know I can work with them and they are going to take some advice from me and any other advisor that I bring into the mix. And you're also being able to see kind of the due diligence, the pure due diligence part of it.
You nailed it. The way that process works is we do our, intake, first meeting, second meeting, pretty much probably like every other VC. And it's funny you say the word due diligence. Our dad joke on this is it's not DUE diligence. After that, we enter what our 30-day, we call it DO diligence, due diligence. We do stuff.
Got it.
and so there's a dad joke on that. And that is how we position it. So it is definitely that. And the value I tell my investors of doing it this way is we actually get investing is about asymmetric information. I know stuff about the founder that no one else forget the industry, stuff that no one else in the cap table knows because I got to watch them do it.
Yeah.
And fail and struggle. And by the way, the one thing I want to say, it's not about taking my advice. It's about understanding how you respond. I mean, the thing that we've passed on 40% of the deals outside the 30 days. That's a tough no. And the overarching thing is why people make it or don't is because what we call action-oriented self-awareness. Don't do it to take advice from me. Do it because you're building a pre-seed startup. So to say another way, like, I don't know, when anyone presents me their deck, I don't know why this is a deck. I tell the founder, the only thing I know about this deck, this is what will precisely not happen.
Right.
It doesn't matter what you're building, right? So then what? Like, how do I underwrite the business at pre-seed? I think later stage you can invest on spreadsheet and it makes a little bit more sense and there's a little more.
Yeah.
How do I underwrite the founder? I only invest in post-exit founders. I only invest in East Coast. I only invest in Ivies. I only invest in immigrants. I don't know, man. Like, I think the human condition is more than that. And the one universal thing that I think all founders have to do, grow their business. Mm-hmm. And that's the gauntlet, funnel, choke point, knot hole, whatever you want to say. I think that is the crucible all founders have to walk through. And I'm here for it. And that's what I want to do. Those are the founders we back. We back warriors. If you're going to look at building something and hope it sells, like, we're just not for you. If you want a fast track, we're not for you. If you want to bump and grind and you're a warrior and you're down to hang with other warriors who are willing to put in the work, we're your firm.
Yeah. Post 30 days. So you've gone through this process. You've gone snowboarding with them. You say, yep, I'm gonna write you a check. You write that check. What happens next? Do they enter kind of phase 2 of some type of coaching, mentoring, or does it revert to a little bit more of a traditional VC where we're here when we need you. We've got our monthly or quarterly board meetings and all that fun stuff? Or are you more involved kind of post-funding than the average VC?
So we do all the things we're a major investor. We have information rights and board observer rights. We're batters and do all the things. That all being said, are you a parent?
Only a cat dad, not a human dad.
Okay. Well, I'm now a parent. My kids are 20, 18, and 16. And so I take the same view as I serve at the leisure of my children. Mm. And we grew all three of our kids in the same house, and they're all so different. So to be honest with you, so what all that hocus pocus woo woo means is that I serve afterwards. My goal is to serve at the leisure of the founder. So some of my founders, we meet every other week. They're heavy into stuff and it's a useful thing and we do it. Some of my founders, like we have quarterly meetings and updates and I still get things asynchronously either through Slack or email. There's still remnants on Slack, of it. Some people we've built business metrics in our 30 days and not only just for me, they still use it as instrumentation. So I don't even need to do an update. I was like, oh, just go to the business dashboard. I was like, oh, we're doing okay. From a structural standpoint, I tell my LPs we have major investor rights and have all the things. But being very honest in the human part of the business, every founder is different. So just like every child is different. Yeah. So I don't, we have safeguards. So we're good fiduciaries of our clients, of our LPs' money. But from the perspective of actually executing the craft of value-added VC, I think the missing part is empathy. And that's what we're very big on. I mean, shoot, we already nailed the crap out of people in that time. So we really, I mean this from the heart, and it's not paternal. I treat my founders like my children. And I mean this so one, that means they all need something different because they're all very different. And I put in the reps to know what it feels like for what they need. Yeah. And second, I will kill for any of them. Just to finish this thought all the way through, I was on the pitch show in Tampa last week. I have 3 portfolio companies that were our pitch companies, and I have a couple LPs. I was like, we're trying to on our Slack trying to arrange guys, I'm just renting a house. Everyone stay with me. I'm just like a dad. And we all lived together. It was awesome. It was the most gratifying thing. And so I treat my founders like my children, and that is done with a huge amount of respect. And they are different. And so to be honest, that's a very long-winded. I give them what they need. I meet them where they are. I do all the VC stuff. That's easy. The hard part,
because you got to protect your investors, you got to protect the downside, and obviously be like you said, a fiduciary, and so that assuming those boxes are checked, then it's kind of gets back to people need different things at different points of their life, but they also need different things at different points of their founder journey and all that fun stuff. Because going from founder led to maybe they're going to hire their first external person that they don't know, right? A lot of the founders kind of go and hire their network, right? Who they know, and then who the network knows, and all of that fun stuff. So I'm sure you're there to kind of support that.
Yeah, exactly. So one of the things I tell, this is not my stat. I think it was another VC shop board partners did a study on value add. I think this is the lack of empathy in value add delivery from VCs is one of the reasons it gets a bad rap. So the stat is 92% of VCs say they do value add. 61% of founders says it's below average. Now, there's a lot of theories behind it, but one of the things I have is, one, they may not have the street cred, but two, it's people who put things through a cookie cutter program. If you're a kid, just think about it from the parable. Why am I like every other portfolio company? Why would I get the same? It doesn't, just like my children don't get the same. And I think that's one of the reasons why things don't land. And then for any LPs in the audience who are doing this, I always say well, if that's the case, what are you paying for? What are you paying your 2 and 20 for, right? Yeah. If 61%, what other industry where you're 61% of the clients are dissatisfied with this very expensive resource, and they'll continue to do it. I ask why. Yeah. My deal is you don't like our advice? Cool. Don't take our money. You better know now. And everyone wins that way.
Yeah, just like you said, it's good to date, move a toothbrush in and see if it works before, you get into a business, which is, sometimes more hard to get out of than a marriage, right? And so, there's a lot of reason to kind of do the check and balance that you do. So we talked about your pre-seed. So obviously you're very early stage in the investment, high risk, but obviously high reward. And I think you said you made 12 or 14 investments so far. Is that
14 for 12 companies so far. So we've done a couple follow-ons, and as our babies are growing up and have raised on follow-on capital, we would exercise some of our pro rata rights. So we're excited about that.
Okay. That's great. How we're obviously, and I'm assuming a lot of your, or if not all of your investments are in some type of tech company, whether it's tech enabled stuff or actual software and hardware and all of that, correct?
Correct.
Yeah. So talking a little bit about AI, because we can't not talk about it. Yep. How do you, as a fund, use it to help you do your job better, faster? And then how do you evaluate what's AI or what's just a really cute wrapper around an LLM? And there's really no moat to protect the company if said LLM comes out with some new feature that essentially renders what they're doing irrelevant.
Yeah, this is why I love being an impact investor. A lot of people think impact is a concessionary strategy, and the things we look for, just very natural. We look for hard data moats. And it's not because we seek them out, but look, if you're bridging the gap between mental health and financial wellness, which is the remit of our company, Money Stack, that data doesn't exist. There's no LLM yet that really connects feelings and finance for someone at the bottom of gambling addiction trying to turn their life around. By the way, most of their, so that doesn't exist. Or trying to integrate the regulatory path between FINRA and HIPAA. So you can't throw, even though it's an AI-enabled startup, it has a novel data moat, it has a regulatory aspect, and it's frankly not on the, I know this having been a financial services, financial wealth, not really on the radar yet for anyone trying to find people at the dregs of problem gambling or substance abuse.
Got it.
Or any mental affliction. And I love businesses like that. The other thing too is we'll look at physical goods and hardware. And I never thought when I started this a year and a half ago, I'd be into hardware, but we've done 4 hardware investments out of Sidecut, and hardware is a moat. It is a moat.
Yeah.
And so that's an area where, for instance, we invest in this company, Stag. They build electrified skid steers. So if you're in construction or do landscaping, they're small footprint skid steers, just like diesel ones, except for they run on an EV battery. And you can run all the quad bots you want. Like it's still going to be hard to be able to do any of that. And those are the things that we look at. And I love businesses like that, where you can think through the future of, well, sure, just climate in general, but then also like nuanced things like indoor construction where you can't use diesel. And you think about the housing crisis, particularly urbanization. Like this makes a lot of sense. And that was, I actually can disclose the terms of that deal because they were on the pitch show. I mean, they were raising 1.1 million on a 3.3 million post. They pre-sold 1 million of these vehicles, and we're the largest institutional shareholder. And a whole bunch of people came in afterwards on a hot, like, I love deals like this. I love deals where people would not ever touch it because there's just huge value, huge upside in solving really important world problems. That I'm excited for AI, but I'm also excited from the perspective of being shielded from it or being a customer of whatever large language model or horizontal innovation comes. That my companies are just utilities that plug in and out of that, and just like, oh, who's got better power? Who's got, I view, for where we sit, it's almost like looking at the mobile stack. Is it better you're on Verizon or T-Mobile at a certain point? I mean,
that's a good way to think about it. I like that idea. So you're more of like, how can we leverage it versus we're trying to compete or get around.
We're the application and implement, and that's our lane. We know our lane. I'm not smart enough to invest in that at the large language, at the horizontal level, and that's fine. I'm excited for people who are making headway in that. We actively monitor. Your second question, we actively use it ourselves. So we have Claude bots running constantly, ranging from deal screening, sourcing to fundraising, all the way to events and making sure we're up on everything in New York, going around. So we're active users of it ourselves. That's how we scale as a very small solo GP firm.
Yeah.
But so we are not Luddites, but we also know our lane, and we know we can make a lot of money for our investors by staying in our lane.
Yeah. Yeah, I think once you start to try to be everything to everybody, you're nothing to nobody or whatever. So, it's definitely good to pick a niche and kind of just drill down and be experts. Where do you see kind of the deal flow coming from? Like how are you getting, and maybe it's you leveraging your AI bots that you've created, but how are you kind of getting the deal flow to the top of the funnel and then starting to weed out the non-superheroes from the superheroes, if you will?
Sure. I mean, to use a football metaphor, we have a run game and a pass game. So our pass game is what you have. We take all the free text deal flow from our partners and accelerators and co-investors, and we've built scripts to be able to normalize this into an Airtable database. And my team, we have 2 venture scouts, a full-time associate, and we do outbound for anyone that fits our thesis. We have a pretty tight thesis: post-product, post-traction, impact, sub 10 million US. And we've done some global deals too. We've done one in the UK, one in Canada. So there's not a lot, something that fits our deals, but we'll do outbound and, but then also too, like, to be perfectly frank, we're pretty good marketers. We like to think we have a pretty good brand. We get a ton in referral by doing podcasts like this, being on the Pitch Show, Startups Decoded, How I Invest. So we are out there bearing the flag for impact at the pre-seed level. For instance, the deal we did with Hapware, which is the blind we talked about related to Pittsburgh. Social impact pre-seed disability tech. Like there are a couple. There's not. I mean, it's not everyone, but like there's a subcategory, right? Adaptation Ventures led the round. Mind Venture Fund is coming in as well, but there's also disability investors that we collaborate with. Gina Klein and Enable Ventures is a great partner. Chris and Samaritan Partners. Molly Lazarus Remarkable. It's a small group that we all right. Like know each other. And I think the best advice I have for people, both for founders and GPs, is like, we put ourselves out there, what we care about. And the good founders find us or they have investors who help find us for them. And I think that's very important. And then for those who are aspiring GPs or angels, like, write and put your flag up and people will find you. And we look at this. We take cold inbound, and we've gotten them through. So we look at all this stuff, but I think it's so much about being brand and putting yourself out on outlets like this. And thank you so much for having a home for people's messages and what they're trying to contribute to the world.
Yeah, no, I started the podcast really to try to build a little bit of an ecosystem between startup founders, people that are funding startups or investing at different stages. And then, what does life look like when you're successful, quote unquote, when you're kind of at that point where you maybe hit Series A and maybe the founder's like, cool, I'm going to check out, or I'm going to move to a board seat, or I'm going to move to a role in the company that I'm really passionate about versus running the company. And that's when you bring an experienced CEO into the mix, and then you take it from, they've gone from 0 to 1. Now they're going from 1 to 10 and 10 to 100 and all of that. So I think it's a really interesting space. And I guess as we kind of wind this thing down here, the next 12 months for you, obviously recording this kind of late April 2026, from what you're seeing in deal flow, and you started this 18 months ago. So you didn't invest or start the fund during the 2021 crazy, everybody was getting, money from everywhere. How have you seen deal flow? Has it ticked up, or has it been pretty consistent over the last 18 months for you? And then what do you look for, or what are you looking to do in the next 12 months from a fund and company perspective and all of that? Those got 8 questions in one right there.
No problem. We'll go chronologically. So one, I was part of that. I did work at different funds, and I was a prolific angel during that time, during the ZERP era, where we've all learned a lot from that time. So I was deploying during that time. I think the biggest break now, which I'm very much for, is that we're just a lot more sober and realistic about thinking about is this a viable business? Although I do think we're on the precipice of getting very frothy, and starting to lose some of that discipline again. So everything is old is new again. I don't think we're full there yet, but particularly in the West Coast, the deals I'm seeing, that don't make no goddamn sense. That's what I'm looking at. With regard to the flow, I think the flow has been pretty consistent, to be honest with you. I think good people are always building. And I do think there's a proliferation now because of how easy it is to build. So maybe there are more. I mean, I think for our sector where it's a little harder, I've seen a little less variance, but I'm just old school, man. I've been through like so many cycles. Like there's always going to be founders and you're always going to miss founders. But like, I'm just here for it. Like like I said, I'm 50. I moved to New York 10 days before 9/11. You think Claudebot scares me? I watch Alex Call. So I think it's consistent. And I think regardless of whatever happens, whether it is AI, e-commerce, cloud, great financial crisis, like I just love the fact that I think humans are always going to want to build, and their eyes and aspirations will always be bigger than their stomachs or pocketbooks. And I think if we find it right, like this is why I love early stage venture. It will always be there in some sort of form because I think it represents, and maybe I get a little bit hokey, it represents the very best of the human spirit in terms of what I'm excited about. So I'm long on early stage regardless of the outcome. And maybe there are differences and some people at Carta can point to little inflections in the chart, but I'm just here for it. And whether there are blips here or there, like I just think this is going to be one of the best parts of being human. And that's why I picked this little perch to sit on for the rest of my working career.
No, love it. Love it. Well, let's kind of wind things down here, as I do with every guest with a 3-pack of questions. So first question here, what's an influential book or podcast, if you want to recommend a podcast, but a book or podcast that you found kind of helpful that you may want to recommend to the audience?
Yeah, the book I talk most about is a book called Range by David Epstein. I don't know if but the premise is generalists will rule the world versus specialists. So it's sort of a debunking of the 10,000 hours to mastery aspect of it, and really talks about the value of having a broad general view. And what Epstein talks about is broad generalists are great at solving what he calls wicked problems, which are unknowing, hard, novel solutions, and specialists, those who complete the 10,000 hours, are great at solving kind problems where you know what the outcome is, control single variables, etc., so on and so forth. So I think I've always loved this book because my life is relatively eclectic, ranging from snowboarding to sales to financial services to impact. I love that. I was like, oh my God, I read this. I was like, I feel seen. I finally feel seen in my life. And I actually think in the world of AI, where the specialist is now just a few clicks away, or a Claude cowork or a dispatch connection away. I really think those that can ask novel questions that combine art and construction, or snowboarding and venture. I think those are the people that are going to really solve some really cool stuff with AI.
Yeah, love it. No, I hadn't heard that book, but I will definitely check it out.
Yeah, it's great. If you don't want to read it, it's also, he gave a TED talk. You could probably knock it out at 2x speed and be done in 7 minutes. But it's been awesome. I've recommended it to everybody, and it's been really transformational. I really think in the world of AI, it's just going to start getting its legs.
Yeah. No, I love it. You may have already you probably have already talked about this. So I guess, but what's a good thing or a favorite thing to do outside of work, maybe other than snowboarding?
Yeah. I'm a huge soccer player and footballer. I'm not very good. I love soccer. It is the world game. It's one of the things that brings cultures together. I love the fact I still play. I'm wearing an ankle brace right now, so I still play. I'm a very slow central back. But I love it. It's just one of the great unifying. Pele had it right. It's the beautiful game. Anywhere in the world, you can just bring a ball, and you can find anyone to be friends with. It's just, I've made some of my best friends outside snowboarding playing soccer or football.
Are you, do you have a European, a Premier League team that you're supporting?
So I'm from Cleveland, and I picked a EPL
You
team.
picked a Cleveland-esque team?
I did, and I am a Tottenham Hotspur, and we are going to get relegated. And
you think so?
Yeah, it's bad. I mean, look, I'm from Cleveland. I know we're going over. I travel to London for work all the time. I said I need to make small talk with my clients. I told my clients I want to find a team somewhere I can travel by tube that's like the Cleveland Browns. And I explained who are these Browns. Old venerable team around tortured fan base and a history of snatching defeat from the jaws of victory.
Right.
And they're like Spurs. And this year has been a constant reminder that, yep, I chose correctly.
Yeah, we can talk about this afterwards, but yes, that's definitely
everyone, all you Arsenal gooners, get at me. That's fine. I'm here for it. Go for it.
I'm a Chelsea fan, so I picked the west side of London.
We have a big match coming with you.
Well,
the match is going to be pivotal to see whether we stay up or not. And
we may relish in the fact of sending you down, but that's
it's fair. It's fine. I'm here for it.
All right, last question here. Favorite vacation spot?
Oh God, I mean, I'll speak about. We were in. I'll go with Tuscany.
Okay. Ooh.
My wife and I went. Before we had children, we used to go and enjoy time with each other at vineyards. And we went on our 20th anniversary to Tuscany. And I just love the people, love the wine. And it just reminds me, I loved the time that we had without children. We are 1 year, 4 months, 3 days, 6 hours, 43 minutes from empty nesting. Not that anyone's counting. I love my child, but I'm really looking forward. Currently, I'm thinking about that time because I'm really looking forward to re-engaging with this amazing person. 30 years after we've had pushed through all the kid stuff, and Tuscany reminds me of that. So that's my answer. My wife Catherine is amazing. I would not be here with her. Sidecut would not be here with her. She came to our AGM, and I embarrassed her by giving her huge kudos for what she did. So I'm going with Tuscany.
Yeah, no, my wife and I have been to Tuscany once. We are trying to go back as soon as we possibly can. Volterra was a cool place if you've been there in Tuscany. But anyway, we can talk about that later. But this has been a lot of fun. I could probably talk to you for a lot longer, but I'll respect your time, my time, and everybody that's listening and watching this time. But if people want to reach out to you, learn more about what you do, maybe they want to learn about Sidecut or they want to take a snowboarding lesson or whatever, what's the best way to connect with you?
Yeah, I'm on the socials. All my socials are Michael W. Ma, including LinkedIn is probably where I'm most prolific. I'm just not that great of an X person. I try to be the cool VC kid. I'm not. I embrace it. That's the best way to look at. And if you're a founder and are interested in looking at what we're doing, please, you can go to Sidecut/pitch us. We publish our whole process of what we look for and do, and we read everything. We ask 2 weird questions. Who is the best coach or teacher you ever had and why? And what evil are you fighting in the world? We read them. Please write things that matter if you're interested in what we're building. So please find us out there. We're excited to be a member of the community.
Awesome. Mike, it's been a lot of fun. I really appreciate your time. Thank you for being a guest.
Thanks for having me. It's been a joy.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.